I think a lot more younger millennials have seen their parents work very hard, and they are able to, with technology and everything and all the jobs and all, they're able to earn more faster, quicker, everything. And they feel like, you know what, let's put the money into vehicles much sooner than my parents and grandparents. I'm telling you, that's the mentality. And that's a good one. Why not? Hey, robots are going to do our work. I'm reading, I'm listening, everything. I mean, there was one big cartoon. Oh my gosh, you're not going to believe this. This was like robots in the front doing the work, and the person whose uh, robot that was big, fat, on a wheelchair. I don't like that.
It's it's kind of funny because I was on a call, I want to say it was this week. I was introduced to this couple, wonderful couple out of
Yeah.
California,
Yeah.
and they had about $3 to $5 million in the stock market. That was their net
Mhm.
worth was mostly stocks, and they had called me because they wanted to diversify into real estate. They
Yep.
wanted some
Yep.
syndications, they wanted some debt components, and
Yep.
they had the conversation with me and they said, I really wish that my children understood what you just said to me because we just went through the process of like how this might look. And they said, I
Hmm.
really wish we knew this before because obviously it'd be a lot easier for us. We've worked
So
hard, the
true.
stock market goes
Yeah.
up and down, and we're
Mhm.
looking for more passive investment. And this is what we're looking to make. They were very clear on what they wanted. They wanted to make $20,000 a month. It was a
Mhm.
passive $20,000. They said right now we're in the stock market and our dividends are all we know and understand. We haven't really broken that out. Sometimes we get some in this quarter and then we don't get paid for another quarter. And then
Mhm.
we're selling some of our stocks to live off of them, which
Ah, yes.
if they sell like 3 or 4% per year, so that covers their whole
Yeah.
lifestyle. So it's,
Mhm.
the stock market does go up more than that, but they said it doesn't feel like the right way to do
Yeah.
this.
Yeah.
And they were grateful just for the introduction, grateful just to sit down and learn. I know you still do calls like this, Vinny. If somebody wanted to jump on a call with you to learn about your syndications that you're doing, if they want to bridge the gap on the final, it sounds like 900,000 you've got left to raise on this one. So that's probably
Yeah.
by the
Yeah.
time this call goes out, it might be done already.
No, see, the beauty is that, if I have not bought much, I tell my investors, whoever are coming, and I record them. I mentioned that before. I always record and I take their permission. I know I'm only meeting with you, but if you don't mind, I'll record it because I'll be covering my presentation. And your spouse, your CPA, your attorney may like to look at it before you make a decision. So I give total transparency there. The key thing is that their money can double money in 4 years or 5 years.
Four.
That's 20.
Look at you,
That's
Vinny. I
20.
said five, you
That's,
said four.
yeah. See, 25%, but stock market will never give us that kind of returns. 8%, 8.10 is the average over 10, 15 years. And lot of ups and downs, lots of sleepless nights, when the stocks go up and down, and the ETFs and whatever it is, right? But if you can get a good solid investment, which I was able to get into with my partners with this hotel. We have another hotel coming. I put my other hotel on sale, by the way. Oh, new news. I bought that Wyndham Garden. We have zero money in it because we made Hilton Garden $6 million. Remember, I bought it with my
Yep.
partners for 6 million, sold for 12 million. So 6 million was profit.
It
We
was free
cashed
rolled.
out
You took
free
that and you went
rolls,
into it again.
5,333. I still remember 5,333,000. We bought Wyndham from the profit. So we have zero money, our own money.